death cross is a technical chart pattern that indicates the potential of a major sell-off in the stock market. It can be easily spotted on the chart of any stock or index with the help of two moving averages, 50-day moving average and the 200-day moving average. So, when the 50-day moving average crosses below the 200-day moving average, we call this pattern the death cross. And I know the name is a little weird, but the reason it is called as a death cross is because the crossover gives the appearance of skull and bones. Right? So people use their imagination and called it as a death cross. Anyway, the reason death cross is important and why people pay a lot of attention to it is that it indicates bearishness or weakness in the market from a medium to long term perspective. Let's take an example to understand this. Now this right here is a daily chart of Sensex, and the blue line right here represents the 50-day moving average and the red line shows the 200-day moving average. Now you see this point right here where the 50-day moving average is crossing below the 200-day moving average. Well, this pattern right here is called the death cross. And as you can see that after the death cross appeared, the market was bearish for a very long time. Now, one thing to note is that although 50 and 200-day are usually used to identify the death cross, but they are not set in stone, right? So the idea here is to have a short-term moving average cross below the long-term moving average. So it's completely up to you. So if you want to use different set of periods, that will be perfectly fine. Now, death cross has been a pretty reliable indicator for identifying the bear markets, especially in the US stock market. And when it comes to our own market, this pattern has reliably predicted the dot-com crash of 2000, the financial crisis of 2008, and of course, the coronavirus crisis of 2020. But remember, just like any other technical indicator, it should not be blindly followed because it doesn't always work. It should always be paired with other data points to reach at a reliable conclusion. Now, a quick word about the importance of the death cross. Now, the long-term investors use death cross as a bearish signal and make their investment decisions based on that, right? So they can say that, okay, maybe it's time for me to get out of the market, or maybe create some hedges for my portfolio, or sometimes the contrarian investors might even see as an opportunity to buy more in the market, right? So there are different ways in which people look at it. So guys, that was a death cross. Interestingly, we have another technical pattern called the golden cross, which is the complete opposite of the death cross, and we will be discussing that in the subsequent videos. In the meantime, if you want to test your understanding of the technical indicators or the stock market in general, we have created a bunch of interactive quizzes. Do not forget to take them and test your knowledge.